Hello, everyone. Welcome to another edition of our COVID-19 Power Lunch, our twice weekly video series that brings our professionals straight to you to discuss new developments and new legislation related to the coronavirus pandemic. As a reminder, I'm Erin Spivak, partner with James Moore & Company, and I'm the moderator of the series. On the menu today is another update on the Paycheck Protection Program. As of Monday, April 20th, this program is no longer funded, but Congress is working on passing somewhere north of $300 billion stimulus package to start the funding again. While we wait for new legislation, we want to update you on the interim guidance that was passed last week related to independent contractors and sole proprietors, and what you can still be doing related to the Paycheck Protection Program, whether you've gotten the funding yet or not. With me today to provide an update is Mike Sibley, partner with James Moore & Company. Thanks, Mike, for joining us. Why don't we get started with, the funding ran out last Thursday. Everybody went into a panic on Friday. What are you hearing from the banks as far as applications, and should people still be applying? What should they be doing?
Thanks, Erin. Yeah, at this point, obviously, everyone is very concerned. A lot of businesses didn't get funded like they were hoping to, even though they got in under the, in what they considered a very quick amount of time. There was just a lot of applications, obviously, and we'll talk a little bit about some of the stats in a little bit. But banks that have these applications in process still, they're leaving them in the queue. And so there is a backlog of applications that still need to be processed and still need to go through the SBA. So if you haven't put in an application yet, you can still put in that application. You're going to go in line. In fact, that's what we'd recommend doing is get in line for the next round of funding. I do think that it's going to come out today or tomorrow that they'll approve the additional funding. There's a lot of will to see this happen, and it sounds like the negotiations are ongoing. Unfortunately, there is still a line in terms of these banks. I know I spoke with one last week directly, and it was a smaller community bank that had somewhere around 500 or so applications. They'd processed 400 plus applications and still had probably about 100 more to go, which I would think that once this gets funded again, provided they have the capacity to be able to do that in terms of the funding allocations, they're going to get through that 100 and then take on additional ones. And of course, we know that this program was somewhat staggered in that the sole proprietors were not allowed to begin applying until April 10th. So they're going to be a big portion of the next round. But I do know there's a lot of concerns with businesses who haven't heard back from their particular bank. So you're just going to have to keep reaching out. Hopefully, once this round gets going, they'll start clearing that backlog of applications.
Yeah, and I think one of the things too that we've heard a lot in the media is that a lot of the larger franchises or restaurant or companies got these loans, and some have been bashed for applying for them. Can you give us some of the statistics about what was funded out of the original $349 billion?
Well, the major statistic out of that was the number of applications that were approved. Almost three quarters of them, 75% of the applications went to loans that were $150,000 or less, meaning the monthly payroll was no more than $60,000 for those loans that were approved on 3/4 of them. So that means a lot of small businesses got funded. Obviously, we hear about a number of large businesses that did get funded as well, and it was the way the law was written, it allowed for certain franchises, restaurants, to be able to apply the below 500 threshold by location. And that's because a lot of the restaurants were basically shut down. Some of these other franchises were basically shut down, and the goal of this was to keep people on the payroll. So that way, when these businesses emerged, then they would be emerging ready to go. And I know there's a lot of other controversy that surrounds it, but the basics of the law allowed for them to look at it by location for the number of employees, as opposed to all employees together, which most of the other small businesses were put under. Of course, the SBA has other sizing standards too, and one of their frequently asked questions, they actually allow for alternative size standards to be looked at, and they have basically by NAICS code certain standards that allow you to apply for government funding. And even if you're over 500 employees, you may meet one of the other standards. And so there's multiple avenues that you can jump into if you didn't qualify specifically under one.
No, that's a good point. I think one of the big things too is that there's a concern that, hey, if another 300 billion is approved, are they going to be eaten up by a lot of these large franchises or restaurants? And there's a thought out there that I've read, and I somewhat agree with, is a lot of the big numbers may have gone through with the first funding, so the second funding may be a lot slower to go because it'll be a lot smaller numbers.
Yeah,
So
it's hard to say. You know, there's been multiple different sources out there saying, well, maybe it's because they went through the large program versus a small lender program where there's a lot more applications to process. It's hard to say. All we can say is we know so far about 75% of loans approved were small businesses, and if that holds up, I do think based on just looking at our client base and the ones we know, there was a good number of very small businesses that were approved. There were some larger businesses that were approved as well. And you know, from looking again at the clients remaining, a lot of them do fall into that small business category. And I think hopefully this round will be enough to get them all funded.
hopefully so. So that kind of segues into the next thing, which is the FDA came out last Tuesday afternoon with the regulations for self-employed and independent contractors. Before that, they had not issued guidance, even though they were supposed to start accepting loan applications on April 10th, of what a Schedule C is, what we typically call these individuals, what they needed to submit to apply, and how is that going to work, how is the forgiveness going to work. And the FDA actually issued a really long regulation that gave almost all the answers. I mean, it did still leave some questions, of course, because that's the way it usually goes. But it did answer a lot of things that people have been speculating. One of the first things was that it talked about partners. So if you're a partner in a partnership and you work in the partnership, so you're in an active role, you typically get a K-1 that has self-employment income. And one of the big questions have been, if I'm a partner, do I need to apply for a separate SBA loan, or do I apply as part of my business? And that was one of the first things they clarified.
Yeah, fortunately, there was some thought process that each partner would have to apply themselves personally for these loans, which really, when you thought about it, didn't make a whole lot of sense, because these loans not only cover compensation or for a partner their portion of the self-employed earnings, but it also covers utilities and rent and mortgage interest. Typically partners aren't paying those costs. The business is paying those costs. So it didn't make a lot of sense for those partners to get full forgiveness or even close to that and be able to apply to those, because they're not paying those bills. What they did come out with and clarify is that the loan should be applied for at the partnership level and will include the partner's self-employment earnings. That'll give them the opportunity, plus any other payroll, of course, that might be within the organization. But that also allows for the organization to write the checks for the utilities and the rent and mortgage interest and those other costs that are included. So that was a good piece of clarification that helps, I think, simplify things. And that was the other thing. Can you imagine the administrative, already from an administrative burden standpoint, you have so many loan applications out there. If every partner and every partnership had to go apply on them by themselves, that would just add a huge amount of applications and paperwork to flow through these banks.
Yeah, and I think one of the things we're waiting to hear is if a partnership had already applied and not included that, can they go back and apply again? And I expect the SBA will issue a frequently asked question on that. Our original thought is probably not. However, it was, maximized at $100,000 of compensation, so about $20,000 per partner, which can add up depending on how many partners you have. But so we're waiting to hear clarification on that piece. So back to the regulations, really got into how does the self-employed individual or independent contractor apply for this loan? And there have been lots of wide speculation. And what the SBA and the Treasury looked like they did is they tried to make it pretty simple. Of course, it's still some questions, right? Was the first thing they said is if you have employees, this payroll cost calculation is exactly the same as it was in the first loan application, right? Is that you include those same payroll costs, group health insurance, retirement contributions as they had explained in the previous one. But what they did then elaborate is something called owner-related compensation. Can you talk a little bit more about that, Mike, what that means?
Sure. Yeah. So you're exactly right. The way they hit the typical payroll costs, that's gonna work the same way it did for everybody else. But then what they came out with is for a lot of sole proprietors, they don't have the same situation as these corporations. This is how are they going to verify? How are they going to document and show what qualifies as their portion of the compensation? So what they said is we're going to rely on the Schedule C. And the Schedule C is a tax form within a 1040 that most sole proprietors report their income and their expenses. And then one of the lines on there says, line 31 says net earnings. And that's essentially what they characterize as the compensation to the sole proprietor. It says you're going to use that number in order to document and apply for the loan. And so from there, so you have to fill out this 2019 Schedule C. Well, the question is what happens if you haven't completed it yet? You're waiting on other forms, other documents to complete. They said, go ahead and fill it out anyway, almost like a pro forma Schedule C, and use the number on line 31 to apply for the loan. And that will allow them documentation to support what that 2.5 times is. So if you're going to take the net earnings, you divide it by 12, multiply it by 2.5, and that's your portion that relates to what's allowed under the loan.
No, and it's again really important that they did clarify, because there's a lot of questions that had come up that said, hey, if I own an S corporation and don't take a salary, am I allowed to claim or apply for this PPP loan for my S corp earnings? And this made it pretty clear that self-employed or independent contractor is a Schedule C, right?
Mm-hmm. Correct.
Yeah. So you're basically paying self-employment tax. So that owner-related compensation formula, basically, if you didn't have any employees, line 31 of your Schedule C is pretty much your compensation, and you're annualizing it to be divided by 12 times 2.5. Mm-hmm. They did also make it so that if that number is greater than 100,000, you're still capped at the 100,000, right, Mike?
Yeah, so you're capped at $100,000 no matter what for your compensation. Of course, when you dial that down to 8 weeks, that's just over $15,000 of basically loan that's forgivable through that. So they're still limiting everything at the 100,000. Of course, if you have payroll costs, and even if you had employees that exceeded 100,000, you're still doing the same exact calculation there as well. So a lot of it ends up being the same. It's just this specific piece says you're going to grab this number from line 31 on your Schedule C. Otherwise, it's going to be a similar application. Maybe the only difference is for those, you're not seeing retirement or health care added into it like you are.
Yeah, I think one of the big questions that we still had was when it specifically talked about where to grab the numbers for health insurance or for retirement contributions. It was really talking about pulling numbers from the Schedule C that you typically pay for employees. Mm-hmm. It didn't seem to give any availability to add those costs in for you as a sole proprietor, correct?
Correct. Yeah, I don't. It almost seems like because of the way it was so specific in the way the guidance came out. I don't see any way, because it tells you use this number from this line, and that's what's going to go into the loan. And of course, we know this, as you mentioned, the Schedule C. That's not, the owner benefits don't belong there, and they show up in other places, and so it's not giving us the options to add those in, and even as it goes through the examples, so those pieces seem to be excluded. They
do, which is kind of odd compared to the other one, but who knows what additional frequently asked questions could come out, or clarification if they open the funding back out to allow this. Because my guess is that a lot of people who had previously applied as Schedule C or self-employed individuals didn't get the loan.
Yeah, that was one of the things, and of course, stepping back a little bit, those who did try to put applications in, because I do know some who had put some applications in, but they didn't have the guidance of the Schedule C at that point in time, and so the best reading we had said, well, you can put in a profit and loss statement or some other form to show that to support your net earnings, and of course, then they came out a few days later to clarify that. I do know of at least one situation where it got put in. I don't know if it'll be kicked out or not without the Schedule C. So I guess we'll have to see how that goes.
Yeah, and again, they did say if you haven't filed your 2019 tax return, that's fine. Just fill out the Schedule C and give it to them, and that's what they're going to use. So they also did include in here the same allowable expenses the loan could be used for, which was mortgage interest, rent, and utilities. But they were, again, were very specific that you had to have deducted those as part of your Schedule C in 2019. So they have to be related to the business. Very similar to what they did on the last one, but they went through a lot of, I would say, more paragraphs and explanations to make that as clear as they could, that these had to be deductible and related to the business. They didn't touch on the home office at all, which was kind of interesting, so we're waiting for clarification on that. But they did say these were, again, allowable expenses. So if you, once you're approved for this and you get the loan based off of that net earnings of a Schedule C, it kind of flips around to say, okay, how are we going to forgive that loan, right? Because that is what we're waiting on guidance. We know what the law said, but then of course the FDA and Treasury's interpretation of it has been a little bit different than what the expectation had been so far. But in this regulation, it seemed like they were really clear on, here's the most you're going to be able to forgive as a Schedule C employer. Let's just pretend you don't even have any other employees. They were pretty specific, weren't they, Mike, about how much you could get forgiven?
Yeah, I was actually surprised. I mean, they were very specific in this. They actually gave some pretty good examples. And I think probably with the exception, we talked a little bit about health insurance or owner benefits, so to speak, and home office, it seems a little unclear. But then again, they were so specific in what they said could be that I almost wonder if the home office will even become an issue because perhaps they're worried about commingling the home and allocations and how that happens. But basically they said you're going to take the 2019 because they're assuming that the sole proprietors don't have verifiable documentation in 2020 because their Schedule C won't be completed at that point. So they're going to rely on that 2019 Schedule C again, that line 31, the net earnings. And they basically said you get 8 weeks of that forgiven. So if you took that number, divided it by 52 and multiplied it by 8, that's going to be your maximum that you're going to get from the owner compensation standpoint. And then of course, you're going to add on the rent, the utilities, and they even went into some transportation costs such as gas, rent on warehouses and other things that you may own as part of the business that you're operating. So it's kind of interesting how specific they went into it, but we've got pretty clear guidance on there. I'm not sure if they'll come out with anything else or that's going to be very, very specific on how we apply the guidance they've given.
Yeah, what's really interesting is it has no bearing whatsoever to 2020.
None at all.
They don't care what you made, what you drew, what you did with it. They said, we're basically going to take the net earnings of your Schedule C that we gave you the loan based off of and prorate it down to 8 weeks, and that's the amount that you'll get forgiven, which is different from the businesses that are totally employee based, where we're waiting on guidance from the employee from that perspective of how much you have to get loan forgiveness, because that's specific to what you pay out once you get the loan. And this is the most you're going to get forgiven. Of course, like you said, plus the rent, mortgage interest, and utilities. But they basically even said in there, like, there's no way to get 100% of this forgiven, right?
Yeah, one of the things they were really, it was a kind of an interesting dynamic when they were working with the Treasury on designing these. They basically said that if you just got it all forgiven, because think about it, what we did to calculate this was we took their net earnings, divided it out to get to 2.5 times. And then they limited it to 8 weeks, saying this would be a windfall otherwise, because a lot of small sole proprietors don't have the other overhead items that perhaps another business might, the businesses that we've been talking about that apply under the payroll. So a lot of these sole proprietors maybe don't have the rent, don't have the interest or other utility costs, which is another reason why I'm thinking maybe the home office isn't going to be in there, because you start thinking, well, maybe they really don't want that. So they said, you're going to get that 8 weeks. And if you don't have those other costs, you're not getting that portion forgiven. So they were very, very specific on, they just looked at it as a windfall. They're trying to make you whole for 8 weeks, not 2.5 months.
Yeah, so let's segue that into what we can maybe read into that, or kind of give our speculation on the loan forgiveness piece for anyone who has already gotten the PPP loan that is running a normal business with employees, because the law was pretty specific on loan forgiveness. But then the FDA and Treasury have taken that and somewhat interpreted it, not exactly as the law is 100% written. And there's some speculation out there of some different things that might come out related to this. So the first thing is they, in the interim regulations before these self-employed regulations came out, when they issued the interim regulations to define the payroll costs and such, they said that no more than 25% of your loan that is forgiven can be for rent, utilities, or mortgage interest. So basically, they kind of capped, like, this is, I don't care if 50% of your loan is used for this, we're not going to allow more than 25% of it in your forgiveness calculation. Is that right, Mike?
Yeah, that's correct. So they remember the whole purpose of this program is to fund payroll. And so that they really want to keep people employed. They want to keep these businesses ready to emerge. If you think about it, if employees are dropping off the payroll because you had to furlough them, you had to terminate, shut down, when we get back out of this, they want these businesses to be able to run, to really hit the ground running as much as possible, assuming, we come out in 8 weeks. I know there's some, speculation, how long will this last? Who knows how long everything, but I think that was really the goal. So they said, with that in mind, then the SBA came out with the regulations that say, well, at least 75% of the forgivable amount needs to be used for payroll and payroll costs. So payroll costs go beyond just the gross wages. It's the healthcare, it's the retirement as well. So the concern that has started to arise out of this is, what happens if you don't spend 75% of the loan on payroll costs? Because there are businesses who have lost employees, who perhaps can't hire new employees, that may not be able to get to that 75% threshold. There's been some interpretations out there saying it's possible that none of the loan is forgivable if you don't hit the 75% threshold, whereas there's others that say, well, it'll reduce on a ratio basis, which is what I think will happen. But until we get the exact guidance on this, and we're already starting to get a lot of questions from clients who have now received the funding. And remember, the 8 weeks starts from the date you get funded on these loans. And so, you need to have a plan in place to make sure you're going to utilize these to maximize what can be forgiven under the loan. And just realize that there's probably going to be some portion, it could be small, that might have to be due back. On the other hand, it's a pretty low interest rate on this at 1%. Your payment terms over 2 years. For some, they're looking at that as almost, free cash to be able to use and give themselves a buffer that hopefully they're back in business again and ramping back up on operations. And if there's a portion that's not forgivable, well, that's okay. We'll just use it to cash flow operations until we get things moving again.
Right, and that's a really good point. And again, that's why, and it could be true, and I hope it's not, but the fact that zero of the loan can be forgiven if you don't do 75% of payroll, and even if you get to 74.75% of it, it seems a little harsh and not true intention, because you keep talking about, and I think this is a really good point, this was to keep the businesses operating and people employed. So if, let's say, at the end of the 8 weeks, everything is not going to be back to normal, we know that, but let's say these businesses are able to open back up or able to go back to full capacity of employees. If they had to stop and turn around and hire and train, it really could be another 4 or 6 or 8 weeks before they're up and running, and that's not the intention. It's to keep your employees, right?
Right, yeah, absolutely. I mean, I can't imagine how difficult it's going to be for some of these businesses who have had to shut down. And there are other places, you've seen other places like the grocery stores hiring and some of these other, do they end up stealing some of your, I don't mean stealing, but those employees have to go somewhere. Do they end up going somewhere else? And then you have to try to hire a new set of employees, train them, and just as a side note, one of the questions we get asked a lot, what are other resources out there? I know locally in the Volusia County area, there is a career source that has training grants for hiring new employees. And don't forget to reach out to some of your career source. I know they're in multiple locations all over the state. They're there as a resource, but I know specifically in Volusia County, they do have funding for training grants and things of that nature. But obviously, as you start getting this loan, you need to start planning for what does your payroll look like. And one of the downsides, or one of the worries that everybody had that came out of this was, well, if I'm shut down right now and I have to pay payroll for the next 8 weeks, I'm literally paying people to do nothing. And yeah, that's been one of the considerations of, do you actually go forward and get this loan knowing that at the end of 8 weeks, as you said, maybe we're not back to normal at all. Maybe we're not operating in a way that would allow for all those employees to come back. Is this loan something that is as good as perhaps, the other portions of the law that where we talk about the employee retention credit? Is that something better? That has to be weighed individually, business by business, case by case. But basically, you could be in a situation where you're paying employees to not do anything, because if you drop them off the payrolls, there's another piece of this law that requires you to have the same level of payroll by employee, as far as we can tell. That's one of the things we're waiting for a little bit more specific guidance on. Otherwise, if they drop off, you could have some more forgivable amounts due back to the SBA.
Yeah, that's kind of the last two parts which is in the law, and again, waiting for clarification on a few things. One is that if you drop your full-time equivalent or your FTE count, then even if you had paid more than 75% payroll costs but had dropped your FTEs, that would reduce the amount that could be forgiven. And we're waiting for the definition of what FTEs means. Is that 30 hours? Is that 40 hours? Do you combine people? And then the other one that was talked about was the more than 25% of your wages have been reduced, basically trying to prevent you from paying, a few people the majority of this PPP loan so you can get it forgiven when you had previously had larger FTE counts and larger wages. So I know one of the questions, Mike, that we get is, well, should I put, my family on the payroll, right, to make up my FTE count or to make up the wages? I've heard that a few times. How about you?
Yeah, that's probably really for those that have been approved, have received the funding. That has been, they're switching gears and looking ahead and saying, okay, what does this mean in terms of the FTE counts? And like you said, I don't exactly know what FTE stands for right now, but we do know it starts, with the 8 weeks once you get the loan funded. Of course, if you do drop below that, they said, well, as long as you correct it by June 30th, in other words, get that FTE count back up, then you can get graced out of that loss. So in other words, if you had 20 FTEs in a past period as they define, which could be the first 2 months of 2020 or last year in 2019 between February 15th and June 30th, at least as it's written right now, we'll see what some of the guidance comes out. Say you had 20 FTEs and you drop down to 16, that's like 80%. But if you get it back up to 20 by that June 30th timeframe, you can correct that situation. However, there's a second piece that says for those people who are below $100,000, if you drop down below 25% of their wages, there's a reduction there. Well, what's not clear is what happens if an employee was terminated or quit on their own and were there in the past. Well, can you hire somebody else to replace that person, and those wages would offset so you don't have that reduction? Or if you add spouses on to add to that, how will that work? And we're just not really sure. I mean, even the law itself has a really strange calculation that says payroll can't drop in the next 8 weeks after the loan compared to the most recent full quarter ending, so basically the first quarter, January, February, March, right? That's 12 weeks versus 8 weeks. So if you take 8 weeks divided by 12, that's less than 75%. You could never meet that threshold. So you can see why we're having a little bit of difficulty with some of these rules. But one of the things that really suggesting at this point is say, start planning now. What does your employee head count look like? At least in terms of what we would consider it for now as a starting point. What does your payroll look like? The best you can consider for the next 8 weeks. There are some businesses that are really heavy on commissions, really heavy on overtime in the past. Well, how are you going to make up for that? Will bonuses be allowed? Will you have to increase, some other type of payroll stipend, so to speak? What is that going to look like? And those are just questions that we don't really have clear guidance to right now.
Yeah, I mean, pretty much anywhere you can go on the internet, you see tons of articles, blogs, question and answers by different accounting and law and payroll companies, and they all have the same thing: additional guidance needed. Mm-hmm. So it's very frustrating for those of us who really like certainty, which is why when the regs came out about the SBA for the self-employed, we were like, oh, finally, we know exactly for the most part, what is in here, this is good, so we can guide people in the right manner. On the loan forgiveness side, we just hope that they'll have enough grace with people who are trying to do the right thing, not trying to have a windfall or take advantage of anything, but they don't want to get caught having to pay 100% of it back if that's not what the intention was when the original law came out. So kind of one last question, or Mike, you might have one for me, but one of the other questions that we've gotten is from the Families First Coronavirus Response Act, which is basically the two-part act that allows, or mandates, I should say, paid sick leave, or the expanded FMLA for those who meet certain tests, employees, I should say, who meet certain tests of either having COVID-19 or caring for people who have COVID-19 or needing to be quarantined, or childcare. Because they have to have childcare because they have to be home because their kids are out of school. That is known as qualified sick leave, and there is tax credits available to offset whatever you pay those employees that are immediately refundable on your payroll tax deposits, or there's even a form you can fill out with the IRS to get the money back. But one of the caveats to it is that if you use that qualified sick leave and take those tax credits, you can't use those wages in the PPP loan. Correct?
Yeah, that's correct. You can't double dip. You can't get the money in one spot and then get the money again in the other spot. And that's really what would be happening. So if you do claim that credit, you do reduce those payroll deposits and you get that credit, you've got to reduce that from what you're claiming as part of the PPP funding in terms of that forgiveness. So that will reduce that amount. Now, one reason why that might be a little bit concerning right now is until we understand totally the 75% threshold.
Right.
Again, I tend to lean that it's going to be a ratio, but at this point, you worry until you see the absolute guidance, because not everything that's come out in the SBA guidance has been the way we thought it would be. They're trying to work through, really what they're trying to do is work through what they felt the intent was of the law, how to make it most fair, all of those different things. And some pieces just aren't coming down exactly the way we thought. But we've got to wait until we get that guidance. We're hoping that it comes out soon with companies starting to get these loans in the last week or so. They're going to need to know how to deal with this. And so my guess would be, it seems like every, I don't know, Tuesday afternoon or whatever, they seem to come out with guidance. So perhaps we'll get it this week or in the next week or so.
Right after we, had this webinar.
Exactly. Yeah, exactly. And well, of course, it's kind of funny. All the terms that are out there is social distancing. This is fluid, unprecedented. Those words are going to be hopefully retired from the English language after this is over. And of course, for CPAs, we're waiting on additional guidance is also going to have to be a sentence that maybe gets retired as well.
I hope so. It's been very frustrating. So I will just follow up on the qualified sick leave. As Mike said, you can't double dip. You can't use it. What do you kind of wait for? You don't have to take the credit immediately. There is some thought you can take it on the 941s when you file them later if it determines that's the best way to do it. But if you definitely have that question, I would reach out to us, your CPA, your HR person, and let them try and help you figure that out to make sure that you don't accidentally spend less than you meant to with the PPP loan, or leave yourself out in the cold of getting a credit for what you're having to pay. I think this law came into place, the FSRA, as of April 1st or April 2nd, but we're starting to see it pick up a lot more as probably some of the quarantining cases come out with the coronavirus, and then also where people thought, hey, my kids are going to be out 2 weeks, we can make this work. Wait, now they're going to be out 4 weeks, and as the state of Florida announced on Saturday, no school is out until for the rest of the school year, which is the end of May or the first week of June. So I think we could see a lot more come out with people needing to take this mandated leave. So that could be a bigger problem.
Yeah, absolutely. It's one of those things that I do see the potential for more of that, but until we get the clear guidance, one thing that's important for all of this is the documentation and coding and how we're going to prove all of this at the end. So it's really critical that you're capturing those costs if it is under the FFCRA versus, if it's just stuff we're planning on getting reimbursed for or forgiven, is this documentation is going to be critically important and how you're able to identify this stuff. So just keep that in mind all along, that is going to be something at the end from the PPP standpoint, you are going to have to prove this to the bank, and they're going to come through and they're going to ask for certain documentation. So it's good to start that process now as well.
Yeah, I've heard a lot of different circumstances of only paying it out of the PPP account so you can track everything. But really, it comes down to just being meticulous about your record keeping of what you spent from a payroll perspective, rent, utilities, leases, and making sure that you have that documentation, because even what we've seen, although the PPP application was pretty straightforward in what you had to submit, I think the SBA on the forgiveness side is going to be a lot more strict on the documentation required to get the forgiveness.
Yeah, I think that's a great point. And again, there's not a requirement to have a separate bank account set up for this. I think for some people, they find it as something that will be easier to see the ins and the outs. Really, it's the meticulous accounting. And it's not just the accounting, it's the payroll reports. And for a lot, that's not a difficult, that's maybe the easier part, but it's the rent, it's the documentation of the rent, it's the documentation of the utilities. And so it's just pulling those things aside to support and make sure that every dollar that you plan on getting forgiven, you can support back to the documentation. And of course, putting that together in a package that's going to be really easy for the banks to get through and follow and make sure that everything is in order is going to be critical. I agree. I think the SBA is going to be very stringent on making sure that everything is all the T's are crossed and the I's are dotted on those.
Absolutely. Well, and hopefully we get that guidance sooner than later. And as we did with the helping people apply for the PPP loan, James Moore hopes to be able to help people put that package together so that when they give it to the bank, it's pretty seamless to get it forgiven. There's not a lot of follow-up questions and issues that come along with that, because that definitely can be, I can imagine that'll be a stressful time as people trying to apply for the PPP and get the money, trying to figure out how much did I get forgiven, right? What do I owe back?
Right. Yeah, I think we did. Really, our experience in going through and working with the banks on the front end of this was really positive. Any questions that they had, they would give us a call, and we could help them walk through it, and they would be immediately satisfied and moved on. So I really think it was a good documentation process on the front end where we helped clients. We are working on a template to calculate the loan forgiveness piece of this. We're hesitating to really do anything with it until we get the guidance on it, because as soon as we put something out, there's going to be something that says, but what we can do is start gathering the information I talked about earlier, is start gathering your payroll, your estimates for payroll, what do your utilities look like, and let's do a basic calculation that says, how much does that add up to be? Is it more than 25%? Is it less than 25? Can we get our payroll? What does our employee headcounts look like? Let's walk through that thought process now while we have time, even though we don't have the guidance, and we can start getting a general idea.
No, I agree. Be able to pivot to something that once we do get the guidance to say, okay, this is what needs to happen, or this is what your expectations should be. Well, again, thank you so much, Mike, for joining me in this conversation. I'm sure we will have another follow-up to PPP once we get the guidance out there, perhaps next week in our follow-up series, and we're able to give more clear-cut answers so that everyone out there knows exactly what they're dealing with, and hopefully by that time they've issued more money so that more individuals, employers, and self-employed individuals are able to take advantage of this PPP program.
Thanks, Erin.
Thanks. See you in our next one.